What's going on, guys? It's David Piatek, and today we're going to be talking about a proposal called HR 6047 that essentially will charge veterans the VA funding fee, even though they have are their service connected for a VA disability, if they're using a VA loan for the second time and on. So let's dive right into it because this is the first time that I've seen where it's actually a negative or reduction in VA benefits for a VA home loan. So let's go into exactly what this bill is, because it's kind of like hidden into a very positive bill, actually. So let's break that down. So it's the Sherry Briley and Eric Edmondson Veterans Benefits Expansion Act of 2025. Now, this bill is getting a lot of traction right now. And they just released that in early December to talk about that. So essentially, what the bill is that it helps the top tier of disabled veterans get an additional $833 a month in compensation. So 833.33. So it's about 10,000 for the year. Now that's very positive in the sense that they will be able to use that money for, let's say, purchasing a property, like using it for a VA home loan. But a lot of these veterans are extremely sick, right? So again, this is an additional benefit that they get. This also includes in dependency and indemnity compensation, right? That also they'll be able to get that. So surviving spouses will be able to get that. Now in this bill, right? So they outline it, and I'll link it down below so you guys can take a look at yourself. But if you scroll down a little bit further, the way that they're actually funding the program is by adjusting how your VA disability benefits work with your VA home loan. Okay. So before we get into that, let me tell you how it currently works. So, right now, if you have a 10% or greater VA disability rating, you don't pay the VA funding fee, right? So that no matter if you put zero money down, if you put 5% or 10% down, right? Because you're not going to be charged any VA funding fee. And if you use it, VA loan 50 times, you can have it. Even if you have 50 VA loans right now at the same time, which by the way, you can. At some point, you exhaust your benefits. Make sure you check out the channel because I talk about all the different ways you can leverage the VA loan on here. So, with that being said, uh, it's interesting that they're making this proposal because again, like you can use it on cash out refis 0%, interest rate reduction refinance 0. You don't have to pay the VA funding fee. It's a percentage, but it's VA funding fee across the board, 10% or greater, right? And the other part to it is that if you're in the process of buying a home but you haven't closed on it yet and you haven't filed for your VA disability, you can actually file your intent to file, and then you have up to a year to file your disability. But let's say it's January, you bought your home, you file intent in January 1st, let's say February 1st, you bought your house, and then the file in 2 years later, you finally get a disability rating of 10%, and it's backdated to January, right? To the current time. Well, essentially, what would happen is you would submit that to the VA, and the VA then would give you a refund of the VA funding fee, right? Very positive, all very good things that go with that. Now, what this bill is proposing, that let me jump right into it to show you guys, is that veterans are using the V loan for, let me just highlight this. I don't see it on my thing here. For subsequent loans, right? So this is where you're using the V loan for the second time and on you and you have a VA disability of 70% or less, you will be paying the VA funding fee. Now, I'll leave it to you guys in the comments to let me know if that's the right thing to do or not. But essentially, there's a lot of veterans that don't receive VA disability at 70% or at 80% or higher. I believe majority are at the 70 or below mark, right? So that's something to consider. And a lot of veterans in their purchasing strategy are like, well, I don't have to pay the VA funding fee. And why it's positive to not pay the VA funding fee in general, okay, is that when you buy a house, and let's say, let me use easy numbers. The house is $100,000 and you're buying the house for 100, it's worth $100,000. And your loan is for $100,000. That's if you're service connected. Because if you're not and you're using the VA loan for the second time and on and you're putting zero money down, The VA charges the 3.3% VA funding fee that's rolled into the mortgage. So now you have a $103,300 mortgage that you're getting, and your payments are based on that, right? So that's why, and that's a small number, right? And that's 100,000, 3,300. Just imagine that goes up to 200,000, that number starts creeping up. And just imagine if you get to $1 million, that's $33,000. Not saying everyone's buying $1 million homes. Average home price is like around $400,000. So it's still a ton of money that you're paying if you have to pay the VA funding fee. Now, one way, if you're not service connected, to reduce the VA funding fee for subsequent use is by putting a 5 or 10% down payment. Now, after the 10% down payment, if you want to put 20% down, it won't make a difference. It'll still be at the 10% reduction for the VA funding fee. So some people will make that decision to do a down payment solely because of a VA funding fee. And we typically, or I typically recommend that that happens because you want to reduce the amount of uh, one VA funding fee that you're paying, especially if you have the funds, right? If you don't, that's fine. You can leverage the VA loan. But when you're going, let's say, upside down on equity, because 100,000, you're buying, it's worth 100, and your loan's 103,300, you're upside down. And right, time normally, right, historically, values are not guaranteed to go up, but historically, uh, the values go up, right? But that is just an additional time frame. Now you have to hold the home before you can sell it and make a profit or break even. So this is why it's so important in your strategy in home ownership to really understand all the pros and cons of the VA loan, which again, phenomenal loan program, but you got to know how to leverage it. And now with these changes coming up, it could change your dynamic when you're going to be home shopping, right? Because you can have multiple VA home loans. You can keep your current property and rent it out. You could buy another one, but this VA funding fee is a big sticking point. And for veterans that haven't used the VA home loan before, they're always surprised that, like, well, what is this VA funding fee? Because normally when you see advertisements for VA home loans, they're normally all just, all the big benefits like no money down, no private mortgage insurance, credit scores are a little bit looser. The requirements financially are much looser for qualifying for a VA loan. Again, all positive things to get ourselves, veterans, into home ownership, but they don't talk about that VA funding fee. Now, we talk about a lot of that on the channel, and especially if you have a VA disability rating, how that could be used to help qualify for a home, because that income can be used right away. And another big piece to that also is your VA disability rating for property taxes. Now, I just did a video recently around talking about that, where there's a lot of states that have restrictions on what veterans can and can't do. This is why it's so important to be on top of this. So make sure you guys have any questions, please subscribe to the channel and drop any comments you have down below. Thank you.